What is up, YouTube? Matt McKeever here with Kasey Wong again. We're coming to you from Toronto, and in today's video, Kasey's going to break down just the evolution of his portfolio.
What are you doing? Like, you're buying so many properties, you have all your eggs in one basket, or you're not diversified. I hear that from everybody. So this is sort of my timeline of my portfolio. So when I started out, it was 2003. So 17 years ago, everybody was a genius if you bought 2003. Even if you bought like whatever, like a garden shed or something like that, you made money here. Then I bought 18 unit. You've seen that. That was the first video that we did. There's always going to be some type of loss or some type of learning or some type of obstacle that you have to overcome. Holding it will actually make your mistakes look really, really small.
Yeah.
So do your analysis, do your due diligence, okay, and the time frame will weather a lot of your storm. It doesn't really matter, right? At that point, you're gonna potato, right? You're potatoing, right? That's Kasey's way. You're gonna potato.
What is up, YouTube? Matt McKeever here, and we're back with Kasey Wong again. In today's video, we're going to be breaking down exactly how has Kasey's portfolio evolved over his time investing. He's been investing now for about 17 years, if I'm not mistaken. It's really interesting to see how he started off with, I think it was just a simple triplex in downtown Toronto, and how he's been able to amass and build the portfolio he has today. Here's the hint. It involves making offers. It's one thing that none of us are doing enough of. It's something that we're talking constantly about in Cashflow Tribe. But regardless, let's dive into today's video where Kasey breaks down for us exactly how his portfolio has evolved over the last 17 years. What is up, YouTube? Matt McKeever here with Kasey Wong again. We're coming to you from Toronto, and in today's video, Kasey's going to break down just the evolution of his portfolio. So we've kind of broken down a timeline here. I'm really excited to dive into this, Kasey. So what are we looking at?
Okay, so this is sort of my timeline of my portfolio. So when I started out, it was 2003. Even if I put 2003 here, it's actually well below. This is actually off the charts because 2002 is when we started analyzing, going through the properties and just getting the hard numbers and sort of the soft analysis there before you even buy. So there's actually like steps before you even buy, before you even close. But my timeline is 2003. It was a triplex, downtown Toronto. Back then, yeah, it was cheap because you're comparing it from now. You can't compare now from back then. This is like literally 17 years ago. So 17 years ago, everybody was a genius if you bought 2003. Even if you bought like whatever, like a garden shed or something like that, you made money here. So 2003, triplex, downtown Toronto, 197,500, Dundas and Broadview, beside Regent Park. But that was a going rate. So 2003, I bought that. Fast forward just a year ago, a year after, it was a 10plex, and that was in Kitchener. So downtown Kitchener, it was a 10plex at $430,000 per unit. That's $43,000 per unit, and I sold it to get another unit, my 65 unit building. So you can see the progression. Then I got 4 townhouses. That was in Barrie. So 4 townhouses in Letitia Heights. So you know Barrie, Letitia Heights is rough. So Letitia Heights, I did rent to owns there, RTO. Bought it for about $125,000 per unit. The corner units or the end units was about $132,000 per unit. And the rent to owns, it didn't pan out. The tenants didn't want to buy it and just kept it. I only have 1 left in Letitia Heights on Burns Circle, actually. Then at about the same time, this is kind of right around that 1 year, this 1 year mark between 2004 to 2005, and I hit about the same time London. London was student housing, you know London. It's Wonderland in Sarnia, 1437 Wonderland Road. That was a small little end unit townhome for $98,500. Imagine that.
Yeah.
And then over at Chapman Court.
Yep.
Okay, I'm not sure if you know Chapman Court. Wonderland in Sarnia, Chapman Court, unit number 18, I believe. And that one I bought for $135. It's a private deal. I think I overpaid for that, but I don't even know what it's worth now. So
a lot more.
It's a lot more? Yeah, so it's just that, you know what, it's just time that basically elevates that price. So yeah, we bought, and some of the comments, they mentioned that I've never went through a downturn. Okay, I know we're talking about this timeline. This sort of popped into my head is that true. I've never been in a quote-unquote downturn. 2008, 2009 with that financial turmoil, that was a downturn. But let me put this into a sort of perspective. Well before this, my parents bought a triplex downtown Toronto. It was actually in Greektown. They bought it for $169,000. Okay, 1988, I believe.
Oh, okay.
1988. So 1990s is when that financial, the real estate downturn took place. So let's say at that time, they actually bought it really cheap, 169, about 170,000. In 1 year, it went up 90 G's.
Oh, wow.
Okay, went up 90,000. And they said that, damn, this is a lot of money. Not in those words, right? But damn, that's a lot of money in whatever Chinese and their own thinking is that, damn, that's a lot of money in 1 year. So they sold, okay? For about 10 years, it was literally flat. Okay, so take this away. Take this little tidbit away from me, is that it was literally flat. My parents, basically, they actually sold, made 90 G's in that 1 year. For 10 years, it was flat, but what if they held it now? Okay, I did mention that to my parents, and my parents are like, you know, don't mention bad stuff, right? I don't know if it's the bad stuff. They earn 90,000, right? But the bad thing is this, is that they would have, now, today's dollar, like the dollar value, market value is well over $1 million for a triplex. Downtown Toronto, Greektown.
Absolutely.
Greektown is good location. They can rent it for about $3,000, if not more. I'll just say $3,000 for argument's sake. They would have been netting about 25, let's say $2,000. Or let's say they're in their pocket 25 to 3,000 or whatever. For my parents, that's a lot of money, right? You don't have to exercise that. You don't have to sell it, right? You can hold it for those 10 years, weather that storm.
Yeah.
That's true. I haven't been in a downturn, but I've lived through it to my parents. So the thing is that, yeah, they sold, they earned the $90,000. They paid capital gains on that, all right? Use that for their own principal resident. Okay, they had to upgrade. My grandparents were living with us, with me, and that's our sort of family situation at that time. But the thing is that this takeaway is this: that if you hold it long enough, yeah, they earned that 90,000, but they would have earned a lot more. Okay, so that's well before all of this has happened. Okay, so yeah, there's a downturn, but if you hold real estate for the long term, I lived through a downturn in that cycle. Okay, so now well over $1 million, providing them with $2,000 or $3,000 of positive cash flow. Even for my parents, that's good money. Okay, so let's move on. Townhomes in Barrie. London was 2-student housing. All right, then I hit Hamilton. I was the only dude that lost money in Hamilton. That's what I say, is that I'm the only guy. I'm the only idiot that lost money in Hamilton. I lost about $500,000. So here's a negative $500K. I lost that, all right? Pay back my investors, that's cool, that's fine, right? I'll earn it somewhere else. Fast forward, then I bought 18 unit. You've seen that. That was the first video that we did. So here is basically Matt's video. And you saw that was at 3.15 million. Right? So essentially, when we're selling, okay, I sold this triplex to almost get this. I sold these to weather the storm. Still have this. My 10plex is when I sold to get my 65 unit. My 65 unit was literally 3 years ago. Here we're looking at 2020 right now, right? We're at 2020. 2020. 3 years ago was I think it's 2017 or 2016. Okay, is when I bought the 65 unit building, and that was in Cambridge, right? So I actually used this money to propel myself over here. Okay, so what's that? 2016 or something minus the 2004. All right, literally, what is that? What is it?
We're almost at 10, 12 years, right?
Say 12 years, right? So it took me like 12 years. All right? So you do need that income. You do, or that capital. You do need that cash to get you from here to there. You can borrow the money. People lend you the money. People can invest with you. I just couldn't find that money, and I had to sell this to get this. But you can see the timeline. It's not, it's not the get rich quick scheme type of thing, but it does take time. But this is real estate. You will be successful if you buy right. Listen, dude, you can lose your shirt. You can lose your bloody underwear. Okay, more than a shirt. You can lose a lot more than just your investment, just your initial investment. You can lose a lot more, right? Or you can be wearing Gucci underwear or something, right? But from here, this is when we started scaling a little bit better, in a way that I moved away from these houses. I had these houses, these 3 buildings here, and then it just sort of, you know what, it made sense to go bigger. I was a property manager, so I was a property manager slash director over at Cap REIT. But you're just learning the ropes. So you're learning, you're going through you're cutting your teeth in what your properties, and then you're just scaling upwards. So you can see this timeline. It does take some time. It took 17 years, right? Mm-hmm. Yeah, I lost money. I lost quite a bit here. Even throughout here, right? I'm still, there's always gonna be some type of loss or some type of learning or some type of obstacle that you have to overcome.
Cashflow Tribe.
Hey YouTube, have you checked out Cashflow Tribe yet? It doesn't matter whether you're an experienced, seasoned investor or brand new to the game. I can probably predict if you're currently not having the level of success you want as a real estate investor, it's due to one thing. That one thing is you're not making enough offers, plain and simple. You need to be making more offers as a real estate investor if you want to hit those big, audacious goals that you're setting for yourself. So here's the deal. Cashflow Tribe, that's the community that myself and Ben were making together. And so Ben's actually so busy trying to provide value to you guys that he had to take off there. But here's the deal. Cashflow Tribe is really a one-of-a-kind community focused on results. That's the difference between us and everyone else. We want to get you guys those results. I'm tired of seeing people commenting on my YouTube channel for 2-3 years now, but they're not making offers. What's holding you back? I'm going to guess that it's either a lack of confidence or a lack of competence. And we cover both of those things in Cashflow Tribe. So here's what I'm going to do. I'm going to make you guys a 7-day free trial offer. You can join Cashflow Tribe completely free, get it tested out. If you like it, great, stay and pay. If you don't, well, I hope you at least find one great idea that you can take away and use to start making more offers, gain more deals, and finally start making the money related to real estate investing that's probably why you're watching my YouTube channel. So let's do this, guys. Let's make 2020 your year.
Cashflow Tribe.
Just learning the ropes. So you're learning, you're going through you're cutting your teeth in what your properties, and then you're just scaling upwards. So you can see this timeline. It does take some time, and it took 17 years, right? Mm-hmm. Yeah, I lost money. I lost quite a bit here. Even throughout here, right? I'm still, there's always gonna be some type of loss or some type of learning or some type of obstacle that you have to overcome, right? But over the long term, you will do well. But make sure you buy right. Every time you do something, you're going to be learning. You're going to have your setbacks. You're going to lose something. But then it just propels itself upwards, right? Because you're holding these properties. My parents wish that they held that triplex till now, right? So holding these properties, the longer it is, weathers a lot of that storm. Mm-hmm. Okay, that time frame, that timeline, holding it will actually make your mistakes look really, really small.
Yeah.
Okay, so again, the takeaway on anything like this is that you buy right, you do your analysis. Like you've seen those videos at how I analyze numbers wise. There's other stuff that you have to analyze. There's your softer, remember I talked about your soft analysis was that numbers don't show it. Mm-hmm. You're gonna sit there on a Friday and Saturday night to see what parties go on. Drug deals or prostitution, things like that. If there is in Hamilton, if there is in London, you're downtown Toronto, because I was in a rough neighborhood in downtown Toronto, right? Mm-hmm. I have to take a look at who I'm dealing with, right? So take a look at it, right? Some of these are good, some of these are actually good areas, right? My 10plex is a good area. My townhouses, not really, but not as bad as where even I grew up. London, I don't even think there might be some bad places in London, but it's not as bad.
Really.
Yeah, not really, right? So do your analysis, do your due diligence, okay? And the time frame will weather a lot of your storm.
I love it. And so Kasey, just for perspective, do you remember, like, was there any point along this timeline where you started to think like real estate might be overpriced, or where like friends or family thought you were crazy for continuing to do it?
Oh yeah, for sure. Like friends and family would always would tell you, hey, wait, like, what are you doing? Like, you're buying so many properties, you have all your eggs in one basket, or you're not diversified. I hear that from everybody, okay? and they say that there's going to be a crash coming, right? They always say that, right?
Yeah.
But if you think that there will be a crash and I think there might be a downturn, okay? So that's why I'm in the multifamily. Now, if you had bought 5-10 years ago, that's your basket that's going to sort of hold you up, right? It's because you bought a long time ago. If you bought, let's say, 100 units in the last year, then it's risky, okay? But if you bought 100 units like 10 years ago and 17 years ago, 100 units in 2003, dude, you're safe, okay? Because you had that equity buildup, right? So be cognizant of what people say. People will always, sort of throw water into your fire, into your success, and say that, you know what, whatever, your success is not going to be long lived, or you know what, there's going to be a storm coming up, there's going to be a crash, okay? But you have to understand what you're doing and be able to diversify even in real estate. Even if everything is in real estate, you can still diversify. Okay, so you can diversify in different markets, in different asset classes, right? Maybe you have 65 units or 100 units, but you bought it recently, last 2 years or 3 years. Maybe you have to divest some of those and get them into multifamily. Maybe if you have a whole bunch in 65 houses, but you bought in 2003, you're already diversified. Trust me. If you see the equity buildup, right, you may just want to hold it. There's nothing wrong with just buying it and holding it until another few more years, until you're completely paid off. You're not leveraging, but it doesn't really matter, right? At that point, you're just gonna potato, right? You're potatoing, right? That's Kasey's way. You're gonna potato, but you can do that. All right. So just be cognizant of what people say. Take it with a grain of salt. Understand that what situation you're in. Okay. You're diversifying within real estate is completely different from diversifying what people think is normally diversifying within markets, like different asset classes, like equity, bonds, emerging markets, things like that. Yeah, you can diversify in that. That's cool. Okay. You can also diversify within real estate. You can also diversify. Okay. So know what you're getting into. Know how your timeline is going to evolve, and also your experience as well. Okay, it's going to weather that risk of holding a certain asset. So yes, we do forecast, hey, there might be a downturn. Okay, and how do we sort of navigate through that as a business and as our portfolio?
Awesome. One last question, Kasey. Did you know back here that you'd end up here?
No. Dude, right here, I'm just worrying about like my mortgage payments or whatever. Right here, I'm just worried about when I first bought this place, I go, my risk aversion was my interest rates. I think I told you guys, I had a 10-year fixed rate at 5.5% because I was scared, right? So that was my risk aversion to 2013. I don't know. From here to here, I didn't even know I was going to even have kids or whatever, right? I didn't even know what car I had to drive. Now I drive a minivan for the rest of my life, right? But listen, you don't know this. You're starting here, or you started here or whatever. You don't know the future, right? But you know, hey, real estate is a good asset class. It's stable over the long term. I'm going to do it, and how am I going to do it? All right, so don't worry about a whole bunch of stuff that you don't know, okay? Worry about the stuff that you do know, okay? And control what you can control. And that's what you should be worried about or cognizant of. Control what you can control. All the other stuff will find its place.
Love it. Great advice. Thanks again to Kasey. You guys know what to do. Smack that like button. Hit the subscribe button if you're new to my channel. If you want more Kasey Wong, here's a classic playlist of Kasey we've got right here. Or watch some of the more recent videos we're doing with Kasey right here. Otherwise, until next time, remember, making money is a team sport. There's more than enough money in this world for us to all make it. But if you're not saving it, I mean, like, what's the point, guys? Thanks.